So I'm going to get to the chase here. I have been provoked and agitated by continual misrepresentation and decontextualization of things, so I'm making this video. Michael Burry has almost all of his portfolio in SPY and NASDAQ puts. Almost 94%. That is what's going around the media. Place after place after place, I'm seeing it. And by the way, you can't argue with the facts. You just look at the top of the screen. Percentage of portfolio, 51.05% for the SPY puts and 42.54% for the QQQ NASDAQ puts. So you can't argue with the facts, right? So many people say that, and of course that's what you would expect from grifters and propagandists and misrepresenters. So here we go. We have an account, 700,000 followers. Breaking! Michael Burry, the famous big short who predicted the crash of 2008, have just shorted the stock market with $1.6 billion. Of course, we don't talk about assets under management or notional versus market value. No, that's 93% of his entire portfolio. And then, so facts, and then conclusion. This is deriving an ought from an is. Now, either he is wrong or we are all screwed. I'm not going to cuss on this channel unless it's by accident. So take from that what you will. Okay, so that's the conclusion. That's deriving an ought, what one should do, from an is, which is that Michael Burry, the famous big short, because why not cite that in some sort of appeal to authority, shorted the stock market $1.6 billion. True, technically. Oh, here we go. Another account with hundreds of thousands of followers. Breaking. Michael Burry has just updated his portfolio up to June 30th. Now here we are on August, 14th? So just updated his portfolio. Michael Burry didn't just update his portfolio. The 13F SEC filing updated his portfolio with his compliance like over a month ago. So that's interesting by using the word just for something that occurred a month and a half ago. Nearly 51% of it's in the S&P 500 puts and 42% roughly in the NASDAQ puts. He has about 1.6 billion in puts total. Puts how? Puts in what form? Nearly 51% of it. What's it? What is it? It's his portfolio? Okay. Here we go. Michael Burry Archive. Blue check mark so you know it's good. Breaking. Because it's all breaking, of course, right? Which means that there's some sort of urgency and emergency to it. Burry has only been trading with $180 million for the last 5 years. That would be in reference to the assets under management. Now he buys $1.5 billion in put options on the SPY and NASDAQ. What does he know? Now, the thing is, I think some of these accounts, I would think that this is a troll account, but it's not. That's the crazy thing about it. So either they're ignorant or this is funnel marketing 101 and I'm giving them even more publicity by trolling people and getting their attention with false, fallacious information. Look, oh, here we go. She has over 400,000 followers. Breaking. Michael Burry has put on a big short in capital letters. His portfolio has 1.6 billion in market value short. That's a very important term that we're going to get to rather quickly. 1.6 billion in market value short. See, the thing is, all the other posts I've now talked about did not contextualize it, but she just did. Market value. He's been wrong, he's been right. Which is it this time? Well, thanks for adding value there. And by the way, she should know better of roughly, because her grift and the way she markets herself and her, what's the word? Persona is this, retired hedge fund person making it on their own, helping out the little guy. I'll let you look at her account and determine that on your own. But she should know that the market value, and I don't mean to confuse you prematurely, but the market value is actually only a fraction of his portfolio. So why is it big? Why is it a big short? Now, she messed up and didn't give wiggle room by being ambiguous to be able to have plausible deniability. But that's because I don't think she understands what's happening here. So let's get into this. Notional value versus market value. An overview. This is from Investopedia. Just Google notional value versus market value, and Investopedia will be one of the first to pop up. Now this is very important, so listen. The notional value and market value both describe the value of a security. Notional value speaks to how much total value a security theoretically controls, for instance, through derivative contracts or debt obligations. Market value, on the other hand, is the price of a security right now that can be bought or sold on an exchange or through a broker. Market value is also used to refer to market capitalization of a publicly traded company. That doesn't affect us. So key takeaways. Notional value is the total value controlled by a position or obligation, e.g., how much value is represented by a derivatives contract. That's notional value. Market value, the word she used, market value is price of a security set by buyers and sellers in the marketplace through supply and demand. Okay, are you confused? Well, here's an example. For example, a call option representing 100 shares of XYZ stock with a strike price of $40 may trade in the market for $1.20 per contract. 100 times $1.20 equals $120 market value, but represents a notional value of $4,000. Okay, so now let's put that into context. You can replace that $4,000 with $1.6 billion. Now, do you see the disparity here in this example between spending $120 to control a $4,000 position? So then you might say, how much has he actually spent to control a $1.6 billion position? But, you know, either people recognize the wrong of their ways or they double down. And this is a prime example of doubling down. This is a prime example of the naivety and ignorance in which people conduct themselves. And I hope a whole bunch of people become smarter after reading the comment sections of all of these, well, they're misleading. Now, under a legal sense, I don't know, but for all intents and purposes, you know that the majority of your audience is probably not the most sophisticated of traders, and the only reason that more sophisticated traders won't be duped into this is because, well, I don't want to call myself sophisticated, but I knew that he ran only a few hundred million of assets under management, so that's actually what tuned me on. I was like, so he has 1.6 billion of shorts, but he only has a few hundred million under assets. Like, how is that possible? And then once you ask that question, you then say, oh, well, it could be possible if they mean notional value instead of market value, but I bet other people are confused. So I went down the rabbit hole, and sure enough, there's a lot of confusion in these comment sections. And some people that seemingly still don't get it. So here's someone calling her out. This is misleading. He did not pay 1.6 billion for those positions, likely only a few million. Her reply is, he has 1.6 billion in market value short. I did not say he paid 1.6 billion for the puts. That's the thing about saying, is that you can say things without saying things, and we as humans imply certain things. If you and I are discussing going out to dinner, and then I say, it sure would be nice if somebody took me to such and such restaurant, then you might get the impression that I want you to take me there. And then I have plausible denial. I don't know why you would think that. It's absurd. Human communication is all about inference and context and communication. And problems like this arise when I said inference and context. Well, you have to have a sufficient knowledge set. Like, I could say sugar's bad. Well, are you going to outlaw sugar across the world now? Or do you know implicitly that sugar is bad outside of moderation? After all, if you had no sugar in your body, then you would immediately fall into what is it? Hypoglycemic state and immediately recede into a coma, if not death. But we know these things, so we don't have to explicitly articulate it, even though people get taken too far with these things. Anyway, back to this. He has 1.6 billion in market value. So does this woman who helped this hedge fund so much and has her own marketing strategies and her grifting strategies and her funneling, market funneling strategies and selling her own kind of persona and brand, who's done all these things, managing millions, tens of millions, depending on which interview, it greatly fluctuates. Or is an Investopedia wrong? Because she should have said he has 1.6 billion in notional value short, not market value. And yes, she did say he paid $1.6 billion for the puts because she said in her prior tweet, market value. Anyway, so we go on and comment says, 13F is notional value. This is beyond misleading. Now, shouldn't she know that 13Fs report in notional value? And even if she didn't, she now does know. Why would she not take down the tweet and then repost a more accurate sounding one? Well, that's up for you to decide. So we have another person who steps up to try to correct the situation. That's the nominal value. As a side note, nominal and notional are oftentimes used interchangeably, and for the most part they are, so please understand that. So, as I've been saying notional, but I've probably slipped up and said nominal by now, but this person's noting the nominal. Just know that means notional in the way we've been using it. That's the nominal value. Might want to delete this post. And then she says, yes, the market value of the puts, not what he paid for the puts. So I don't think she gets it. I don't think this is actually an intention to deceive. Yes, with much of what she does, it's to stir up drama and attention, people point and sputter, manufacture indignation, and so on and so forth. Of course, there's plausible deniability in saying any of that, but you operate at your own discretion. Yes, the market value of the puts, not what he paid for the puts. And then bow-tied option says, you should probably let your followers understand that because it sure doesn't seem like it after reading the comments. All these Twitter account farming engagement with us. Huh, amen to that. And then she posts how she said the 1.6 billion market value on the listen carefully. So she posts, to correct things, the 1.6 billion market value on the 13F, as we just discussed, the 13F reports in notional value, and she knows this because she was told this, not to mention she knows this from being a hedge fund manager, blah, blah, blah. The 1.6 billion market value on the 13F below refers to the notional value, which indicates how much money is controlled by the position. Michael Burry did not pay 1.6 billion for the puts. Here she just used, in that first sentence, market value and notional value interchangeably. And you could say, innocent enough, we all make mistakes. And fair enough. Fair enough. But what happens to most people is they get corrected and they completely ignore it and move on as normal. It makes a big difference. A big difference when dealing with options, market value versus notional value. And then bow-tied option says, good, I'm just looking out for newer traders so they understand. And then a handshake emoji, which, by the way, I believe is now incriminating in the court of law. I think there was a Canadian case for farmers, and then someone either gave a thumbs up or a handshake or something like that, and it was considered legally binding signage for that contract that the farmer sent the person. That you can look that up. But here's the crazy thing: the person correcting the wrong person still doesn't notice the mistakes, using notional value with market value interchangeably. And I don't suspect ill intent in this, actually. Just people not knowing what the hell they're talking about and pretending that notional value and market value are the same. They don't even recognize what's going on, and that's after calling them out. It's incredible. And this handshake is like learned nothing, seemingly. So enough harping on that one. And here's an instance of, so close. You know, they almost got it, so close. You know, it's like a person who keeps on walking into a sliding glass door And then you tell them you could open the door, and then they're like, I'll just remove the door. And it's like, he got it so close. Like, he could just remove it to the left by sliding it open, but so close. And now, raccoons and squirrels get into the place. He's like, so close. It's kind of similar. This makes up 93% of his portfolio. It actually doesn't. His 13F holdings, which is what you're looking at, doesn't contain his cash and non-US positions. Fair enough. True. But seemingly they don't understand why it actually doesn't make up 93% of his portfolio, which is the notional value. So that's the thing. You could say that his portfolio is concentrated 93% in shorting the SPY and NASDAQ, or the S&P and the NASDAQ. And that would be a true statement. But the problem is that it's decontextualized as a notional exposure. And I'll give you another example of how I often see another similar conflation go on. It's nice to see people in the comment sections. I always endorse. I used to be the kind of person who always condemned comment sections. I read an article, I move on. What do people in the comment section know? Well, matter of fact, on Twitter, the answer is more than the article. More often than not. Sometimes not the case, but comment sections are worth just as much of a read as a post. Same thing with if you go on Seeking Alpha or something like that, or Value Investor Club, so on and so forth. Comment sections are most definitely worth looking at. So we have a couple comments. It's just hedge, and the weight is calculated wrong since it uses market value, notional value. But he only paid premium for those options. You see that? You see how they got that wrong? They just said notional value and market value are the same. They're not. And it's probably a hedge. Or it's a tactical trade. Michael Burry is renowned. I don't know historically when he puts on a put why he's doing it. If he's hedging, if he's short the market, if it's a tactical trade, I'm not familiar enough with his style to know. So it could be a hedge. And the weight is calculated correctly because the weight is calculated based upon notional exposure, not market value. So you don't know if it's a hedge. The weight isn't calculated wrong unless you want to undermine the entire structure of how 13F filings are filed, and fair enough. Maybe there's a reason for that, but insofar as how they're expected to be filed, it's not calculated wrong, and market value is not the same as notional value. Somehow, this person managed to correct a wrong person and be wrong themselves on multiple fronts. But he only paid premiums for those options, and his portfolio market size, only stocks, hasn't changed too much. So I think these options are just hedge. Fair enough. I guess you could say right for the wrong reasons. Then we have another comment. This is the value of the underlying shares, not the cash he has actually committed. Divide share count by 100 to approximate actual position. This is my guess for his portfolio makeup on a cash basis, though it's impossible to know for sure. Okay, we're getting on the right track. We're getting on the right track. That's good. And it's good even if people are wrong in their replies, calling out other wrong things, at least they start inserting doubt into the comment threads to make people say, hold up, what? What do you mean by this? What do you mean by that? Okay, things weren't as I thought they were on first glance. And a lot of this is classic doom porn by decontextualizing something and therefore overstating and or understating it. In this case, it's a massive overstatement. Here's a good comment, kind of interesting thread in and of itself. For F's sakes, he didn't pay $1.5 billion. It's just a notional amount. He only paid premium for that put options that are equivalent to shorting that amount. Jesus, and I think the premiums cost like only millions. And then he goes on to say, actually premiums depends on expiration date and strikes. Fair enough. Man, here's a funny comment. One that I commented on a few weeks ago about how I only bought 17 or 19 shares of Transocean, yet that was like 20% and 17% of my entire book. Only millions, LOL. He ain't Warren Buffett to call it just millions. And then the reply is, he's stocks valued at 100 million and not reflecting the actual cash or treasury bills he's holding. So yes, just millions isn't too much for him. Oh. So yet again, decontextualizing millions. Millions to Warren Buffett is a rounding error. Millions to someone with $100 million with assets under management is a few percent. It's a bad month's performance on the downside or a good month's performance on the upside. So just implies minimal. So it's a minimum millions, which if, yet again, Michael Burry's running over $100 million assets under management, it's only a couple of percent. So if you've watched this long, maybe you've watched other videos of mine. And if you have watched other videos of mine, you hear me always say that you must insist upon questioning a word in a statement as much as the statement itself. You must be heavily skeptical and suspicious of people who do not add context to things. You must be heavily skeptical and suspicious of people who give you a numerator without the denominator. And you've heard me tell this story, and if you haven't, here it is, about on the headline front page of a newspaper years ago, they were thinking about banning peanuts from the baseball stadium. And it said over 1 million Americans are allergic to peanuts. Should we ban peanuts from the stadium? And then I got to thinking about it, and I was like, hold up, if there's 300 million Americans, that's 1/3 of 1%. So why did they say over 1 million? Why didn't they say 1/3 of 1%? Or why didn't they say 0.3% of Americans? There's all kinds of ways. And by the way, putting it any of those ways are facts. Can't argue with the facts, man. But that presupposes that humans aren't heavily, and I mean heavily, reliant upon the framing of how a statement is made. As the saying goes, statistics are like bikinis. What they reveal is suggestive, but what they conceal is crucial. Okay, so you have to beg the question of what a word means. So in one of the earlier slides, I said, what does it mean? 53% of it is short the portfolio. It's like 53% of the notional exposure. So something as simple as the word it actually makes quite the difference. Okay, so when you say exposure, that's a tricky word. If you ever hear the word exposure, when a hedge fund or something like that is in the conversation, is part of the context of the conversation, you really need to perk up and listen and ask questions. And I'll tell you why in a moment. Besides this notional versus market value, okay, so you need to know the difference. Then they're not trying to make it sound like something. She said, I didn't say that. You did actually. By saying market value, that is what you said. And people called you out on it. You refused to admit it. Reconsider, recognize, reflect on it, and so on and so forth. First of all, it was disclosed June 30th. Well, it wasn't disclosed June 30th. It was at the end of June 30th. Okay, so now you have latent information, a month and a half old. So what good does it tell you? The market's gone up since then, or sideways at least. So what? Okay, second, now what? Is he hedging or is he outright bearish? Is this a tactical trade or is he hedging maybe the bank stocks that he bought in Q2? Like, you don't know. Is he delta hedging? Do you know what delta hedging is? Like what's going on? And you have to ask yourself, as I insist time and time again, what utility does this information give you? What pragmatic, practical, actionable information that you can then distill into a comprehensive framework do you take away to then prompt you to action? Okay, well, Michael Burry's really smart. He's shorting the market. Should I short the market? It's like, that's how people are going to take it in part. And then this is an example about when you hear the word exposure, why you really need to listen and perk up. And really you need to be that way for a lot of things, but what happens if I told you I was 30% short? What would you think? Well, what I didn't tell you is that I'm running a long short book and I'm 130-30. And what that means, a lot of funds do this, 110-10, 130-30, 150-50. You don't hear much about this with Melvin Capital. Like Melvin Capital was short, but Melvin Capital was also, at least at some point, long GME. And why do they do that? Well, they do that to minimize volatility, in part. Smooth out the returns. So, although I'm 30% short, I'm also 130% long. Yet you think I'm bearish, and you think I'm bearish because, oh my God, he's 30% short. And let's say that's actual market value, not notional value. Because you might watch this video and I tell you I'm 30% short, and you're like, you're not going to get me twice. That's notional value. And then I say, no, that's market value. I'm actually 30% short market value wise. And you're like, oh my gosh, he must be bearish as all get out. And then I don't tell you that I'm 130% long. Like, you really need to think about these things. And the thing is that most people don't. And this, yet again, if you watch this long, this is uncharacteristic. This is actually the first breaking news emergency video I've made all year. I make one video, I release it sometime in the weekend. Quite the movements in Argentina news, am I right? Anybody still watching? I suspect I'll be making a video on that this weekend, but it's only Monday, so who knows what's going to happen for the next 4 days. But you really got to think, and think correctly. It's one of those, I did the math, but I just got it wrong. It's like, yeah, but you're bad at math type comic meme that you might have seen. So, yeah, with that said, that's how important I found this, and just how disgusted and provoked I am. And, these people have responsibilities. Just like music artists say they don't have responsibilities for influencing the youth. If you have hundreds of thousands, you've adopted that role of being an influencer, finfluencer, ha ha ha. And like you have a responsibility to some extent. I don't know if it's a legal responsibility, and you could say, well, moral responsibilities are subjective and fair, like whatever. Like, but come on. Seriously, people. Seriously. Thank you for watching.